Good afternoon, learners. Okay. I hope you're all well. Well, for the next 2 hours, we will be looking at, I will be your presenter. My name is Kofi. I'm based in Bloemfontein. Right. I might have met some of you before, or some of your educators before. Right. Let's have a short prayer. If there's no resistance from that side. Father God, we want to thank you for this afternoon. We thank you for the opportunity that you have given us so that these learners who are hungry for education will be able to access or listen to whatever is going to be presented this afternoon and help them improve on their grades. This I ask in the name of Christ Jesus our Lord. Amen. Right. Having said that, I've already mentioned my name to you. And this is what we are going to look at this afternoon. One of the topics for your syllabus, the grade 12 content, is agricultural production factors. Some abbreviate it to LLCM, land, labor, capital, and management. Management, we can also say entrepreneurship, right? So land, labor, capital, or management, or entrepreneurship. Now, it's not possible for us within these 2 hours to go through the whole content of production factors. So I've limited myself to certain aspects of the syllabus, of the content, or the ATP, that I think learners, as an educator, I know learners have always been having challenges. So I've selected a few aspects of production factors. We will be looking at the law of diminishing returns. That comes under land. And then we'll be looking at capital. We look at the important aspects, very important aspects of capital. And we look at some main financial statements that are relevant for grade 12 agricultural sciences content. And we will be looking at some calculations on the relevant financial statements. So this is what the aspect that I'll be looking at this afternoon. 1, the law of diminishing returns. 2, important aspects of capital. We look at main financial statements that are relevant to you. And then we'll also be looking at some calculations on financial statements. Right. So we start by looking at land. You look at the economic characteristics of land. And one that we say is that land is limited in location. The land in, say, Queenstown cannot be taken to a land in Bloemfontein and you come and plant on it. It's not possible. The land in Eastern Cape cannot be taken to any other place. Land cannot be destroyed, but it can be degraded. If land is going to be degraded, if you take the topsoil out from the land, then we are obviously removing the top layers where most of the plant nutrients are concentrated. You and I know that the plant only absorbs nutrients from the top few centimeters of the soil. So if by construction, by any human activity, that aspect, the top part of the land is taken out, then the land can be degraded, right? But it cannot be destroyed. It cannot be destroyed in the sense that even if the land is degraded, we can still improve the fertility of the quality of the fertility of the land for plants to grow again. And the land is restricted for certain types of plants, right? There are some areas that you can grow maize. If you look at it, Free State, for example, is where most of the maize in this country is grown. If you get to KZN, for example, there you have what? Sugar cane. where we have monarchy sugar, where you get sugar from, right? The land, Free State land, cannot be used to plant sugar cane. And similarly, most of the KwaZulu-Natal areas cannot be used for planting of maize, and also differs in production capacity. What am I talking about here? When I talk about production capacity, right? No two types of land are the same. No two land contain the same types of soil. They don't contain the same type of nutrients. So different lands have different production capacities. If, say, land A can produce 10 tons of maize per hectare, the production of maize or the productivity of maize on the other piece of land B, might not be up to 10. So they differ in production capacity. And the land is also found in a specific environment, different places. Soil is durable. Soil is durable. It can be there forever, right? Now, the most important aspect, like my overview, what I said is that we're going to look at the law of diminishing returns. A lot of times, grade 12 learners struggle to answer questions on the law of diminishing returns. So this afternoon, we want to deal with it in such a way that when you see a question on it, and almost every question paper 2, question 3 in paper 2, the trial and the final exams, almost every year you find some aspects of the law of diminishing returns. That is why I've decided to include it here. Now, what is this law? You're talking about the law of diminishing returns. In your syllabus, it falls under agric economics. The agric economics, you have agricultural production factors, right? And then you have marketing and marketing management, or marketing and then management. Those are the two aspects of agricultural economics. Your syllabus has also been designed in such a way that we draw, or agricultural science draw from different disciplines. We draw from economics, we draw from life sciences, we draw from maths, we draw from physics, we draw from sociology, and other things. So in economics, that law, or the law of diminishing returns, states that when one factor of production, such as labor or fertilizer, increases while keeping all other factors constant or the same, a point to be reached when additional increases will result in a progressive decline in output and yield. Let us dwell a bit on this here. When one factor of production is increased, what are these factors of production? When we are producing maize, when we are producing potatoes, we may add fertilizer to the soil. We would definitely employ people, whether to dig the ground, to weed or harvest, whatever. Those are factors. We use those ones as factors to produce. At the same time, we can also say that those are inputs. You see, in production, we have inputs and then outputs. What are these inputs? Our inputs are the things that we use or farmers use to come out of a product. Labor will be employed, fertilizer may be used, water may be used to produce. So that is a factor that I'm talking about, a factor of production. And I've given 2 examples, fertilizer and then labor. Once you increase it, a farmer is growing crops, is increasing fertilizer, quantity of fertilizer on the same piece of land, right? Why the labor of fertilizing, while keeping all other factors constant the same. A point to be reached when additional increase result in progressive decline in output or yield. Now, if you have a piece of land, let's say 1 hectare of land, 1 hectare, right? And then initially you're growing maize. You start to say 1 bag of fertilizer, 2 bags of fertilizer. It's the same hectare or acre, 1 acre or hectare. You keep on increasing the fertilizer quantity. You've left the land constant. The land area is 1 hectare or 1 acre. It's constant, it's the same. But then you keep on increasing fertilizer. You keep on increasing the number of laborers that are working there. You reach a point, or it will result in a progress. Initially, when you had, it will be increasing, the yield will be increasing. But there will be a point that when you increase our input, your fertilizer, your labor, initially the increases will be high, but you reach a point where your increases will decline. That is why we talk about progressive decline. Progressive what? Decline. Even though it's increasing, your yield will be increasing, but the additional amount of yield, the additional amount of output that you get will be declining or be reducing. That is why we talk about progressive decline in output or yield. So if I be state the law once again, when one factor of production, such as labor or fertilizer, increases, you keep on increasing, the farmer keeps on increasing, 2, 4, 5, 6, 7, the same piece of land is work on the same piece of land. The land area has not increased, but labor or fertilizer increases. You reach a point when the additional increase that you put there or the input will not result in any appreciable increment. So let's look at it from this, use this table. And I must say that sometimes in the question papers that you get, the examiners might bring a table like this, and sometimes they can even ask you to draw a graph, the input versus the output. Now, if you look at this carefully, when we didn't put any fertilizer at all there, we had a yield of 0, right? When we put 1 bag of fertilizer, the yield or the output of maize was 10 bags, say 10 bags of maize. When you put 2, you got 15 bags of maize. When you put 3, you got 25 bags. When you put 4, you got corresponding yield or output was 40. Now, when you put 6 bags, we had 55. When you put 6, we had 57. Now, these are hypothetical figures. Anyway, they are trying to illustrate the point that I'm trying to make. Okay, now let's look at the output. When you put 0 bag of fertilizer, we have. Now let's look at the differences in the output. We started from 0 when you didn't put any fertilizer, and then 1 bag we have 10, 2 we have 15. Now look at the intervals. 10 to 15, the interval is 5. 15 to 25, the interval is 10. And then 25 to 40, the interval or the increase, the yield increase was about 15 additional bags. Now let's look at 40 to 45, also 15. Now look at between the addition of 5 bags of fertilizer to 6 bags of 6 bags of fertilizer to the output that you got 57. Now, if you look at the differences between 55 and 57, you only see that the additional output was only 2. The additional output between 5 bags of fertilizer and then 6 bags of fertilizer, the additional increase, even though it was increasing, but the increase is now reducing. So if you may go back to the previous slide. Okay, so let's look at this. I've gone back to the previous slide. It says one factor of production, such as labor or fertilizer. In this particular example, it is the fertilizer that was increased. So once we increase the quantity of fertilizer, the number of bags of fertilizer, whilst our land remain the same, there will be a point where additional increases result in progressive decline. Look at the word decline, right? Progressive. Even though it's increasing, but the increases is slow. If I may draw an analogy. If a car is climbing an uphill, you guys are living in the Eastern Cape, you know this much better than me, right? You know, down there, the car will be speeding, maximum speed as it's trying to climb, ascend. But at a certain point, then it has a lot of speed, right? But as it gets up there, you said that even though the car is moving, it's climbing, but the speed has decreased. Even though the car is still ascending, it's moving, right? So that could be an analogy that we can have. So this is the law of diminishing returns that you talk. Watch out. Examiners can bring a data like, once you see this in question 3, data like this, they can ask you to either draw a graph, and even also ask you, they may also ask you to explain the relationship between the input, the number of bags of fertilizer, and then the output, right? They might ask you to explain or deduce. It's a higher order question, but it's not something that can frighten you. Deduce the relationship, what's going on. If the number of bags of fertilizer is increasing, what is happening to the output of maize? So here we can safely say that from 1 to 4 bags of fertilizer, the yield was increasing very much. But from say 5 to 17, 5 to 6, the additional amount of the yield was small. It's not much. The difference is declining because we didn't have the same much difference, like say 10 and 15, or between 1 bag and then 2 bags. Right. Now let's look at a graph here. This graph also represents the same law of diminishing returns. The law of diminishing returns. Now, if you look on the y-axis or the vertical axis, we have output. We can also say yield, or bags of maize, bags of potatoes, tons of cabbage, right? That is yield. That is the output. That is on the vertical or your y-axis. Let's look at the horizontal axis, which our x is our x-axis. What is there? That is our input. What is this input? Still, if we go back to the definition that we gave for, we accepted for the law of diminishing returns, we see input. The input can be fertilizer, it can be labor, it can be water. I mean, irrigating water, right? So from left to right, you see that, sometimes I know some of you make mistakes, especially when you asked to draw the law, demand and supply curves. Some of you are so wonderful. You make serious mistakes of starting with the larger figure on the left and then ending the small figures, which it's a cardinal sin. You don't have to do that. Creatives shouldn't do that. If you're doing that, you made a big mistake. So we come from the left to the right. So you see that 0 to the output will be increasing towards the right side, to our right. Okay. From the y-axis also, it starts from 0 and then to be increasing upwards. So let's look at this graph here, which represents the law of diminishing returns. Let's look at the first point of extrapolation. On the y-axis and the x-axis, Okay, Y and then the x-axis. You see that there's a blue dotted line, both horizontal and vertical, right? Now, around that place, you see that the yield, the increasing returns, the yield that the farmer is getting after applying an input like, say, labor, live fertilizer, you see the dramatic increases between the input, the output, right? Now, at a certain point, the point of diminishing returns, diminishing means it's getting what? Smaller. Diminishing means what? It's getting what? Smaller. So as you reach that point, if you reach that point there, you see that the yield keeps on, even though it's increasing, but the increase is at a minimum level, at a slow level. So we say that there's what you call diminishing returns. That even though the yield is increasing, but at a decreasing rate. Yield is increasing, but at a decreasing rate. So we reach a point of maximum yield, the best yield. After that, even though I'm not going to talk about the negative return, but the most important that you guys must know is that initially there's an increasing return. The return is that the number of bags or the yield is increasing, right? But you reach a point where even though it's increasing, but at a decreasing rate, it is increasing, but it's at a decreasing rate. So let me go back to this law, the law of diminishing returns. Okay. Okay. When one factor of production, such as land or labor, increases while keeping all other factors constant or the same, a point will be reached when additional increases will result in a progressive decline in yield, right? So this is this also you should be on the lookout for a graph. One other way they can ask you this, they can ask you to draw a graph and then you come out with something like this, right? Or they can bring you this graph here and ask you to explain the points from say the 0 to where the point of returns, the point of diminishing returns starts setting in, right? Now, you see, I'm one person, I always believe the learner is the beneficiary, and as such, I make my learners work more in class. And the experience shows that the learners who work hard in class are the ones who also perform finally. So I'm going to ask you to answer these questions, right? And then we will come back, when we are done, we will discuss. I will give you some time, right? But let's look at this question together. We have a graph on the left side, the quantity of output in kilograms. That's the y-axis, right? The vertical axis. And then we have the quantity of inputs. Our inputs can be fertilizer. Our inputs can be labor, as I said earlier, right? And then we have our total yield. Total yield. The graph is illustrating the total yield here. And then the question says, identify the economic characteristics shown in the above, in the graph above. Let's say the graph on the left side. Okay. Let's look at, this is your y-axis, okay? This is your y-axis, right? You see the y-axis, and you see the x-axis. Now, if you look at it, the x-axis, the quantities are increasing. Here too is increasing, okay, increasing up there. Now, on the left side here, they said identify the economic characteristics shown in the graph above, on the left side, let's say on the left side. Now, listen to this carefully. The examiners can use these two words interchangeably. They can say economic problem. Listen carefully. They can say economic problem, problem. In question 3, paper 2, question 3. They can either say economic characteristic or economic problem. They are the same thing, one and the same thing. Economic problem associated with land, or problem associated with land, or economic characteristic. Don't get confused. The difference between the two is the same. Same. Are you together? All right, I believe you're together here. So watch out. So you don't get confused. You don't see what are these people talking about? So question 3, paper 2. You might also find a multiple choice question section A, right? So economic problem, economic problem of land, or economic characteristic is the same thing. So let's go back to the question. Identify the economic characteristic shown in the graph on the left side, on the left side, right? And then 2, describe the implication of the economic characteristic identified in this question, in question 1.1, the one that you identify here, this side here. What is the economic characteristic that you have identified here? So describe the implication of it. And then the question 1.3, say compare the output response. What is your output? Your output is the one that is on the y-axis. Your output is where? On the y-axis, all right? Compare the output response with regard to the quantity of inputs. Where our inputs? These are our inputs, right? The inputs on the x-axis. That increases from 5 to 10. Say 5 to 10. This is 5 to 10. And then from 5 to 10, then from 10 to 15, 10 to 15, right? Now, I will kindly urge you, when answering questions, I know my colleagues have told you, but it's a reminder, you underline key words. You underline, it's a reminder. My colleagues also have told you all those things. So they talk about economic characteristics, you underline it. You see, in examination, you don't rush, right? You don't. If somebody says 1 hour is finished, out of 1 hour, 2 hours, let the person go. Let the person. You are there as individuals. So they say implication of the economic characteristics identified in 1.1. And then the third aspect, compare the output response, right? So you are going to talk about the output. If you increase the input from 5 to 10, right? 5 to 10, what will be the yield? What will be the yield response, right? 5 to 10. 5, I guess. Oh, no, I don't have to do. I'm just explaining to you because I believe you'll be able to answer this question. So, regard to the question of that increase from 5 to 10 and from 10 to 15. So don't forget, first is 5 to 10, and then the second is 10 to 15. So if you are not careful, if somebody who is rushing, you might not even answer both. You just write one, but there are 2 marks there. And remember what we always tell you, in examination, 1 mark is even, if you get 44 out of 150, it's level 1. If you get 45, it's level 2. And again, if you get 119, it's level 6 out of 150. If you get 120, it's level 7. And I believe all of you are striving to get the best mark of marks, or maximize the marks there. So let me give you some time to answer this question. How many marks here? 3 plus 2, 5. Okay, I'm giving you 10 minutes to answer this question, and then we come back to discuss. So check your time. It's about 2:30 now, 2:45. We come back to discuss this question. So please read this question carefully And don't forget, you are practicing. This is an examination, a typical examination question of previous question paper. If you're able to work through them now, when the final paper comes, when your trial exam comes, you will not struggle. So take your time, read through the questions, digest the question, identify. Here they say identify. You say you're identifying. So it's just one man, identify. You are not describing, just identify. Look at the key verbs, right? Okay. And then I'll come back to look for answer 2:45. All right.
You are unmuted. Hayi,
Yeah, it's fine. Okay. Plus, I hope everybody's done by now, right? We're going to look at this memo here, and then you mark your work. If you have a question, you are allowed to ask questions, right? You are allowed, right? So our question had asked us to state the economic characteristic of land that's depicted in the graph that was on the left side of the slide. And that is the law of diminishing returns. I think previously we had exposed you to one graph that was like that. And this, like I said, is a typical examination question, right? Now, the next question, so you mark your work, and if you think you made a mistake, if you made a mistake or if you got it wrong, you write the correcting, make corrections. Okay. 1.2, implication of the law of diminishing returns. Output will initially increase at an increasing rate. Let's look at it. Output will initially increase at an increasing rate with increase in input. So initially we saw that when the input was increasing, the output was what? Also increasing. So the output will initially increase at an increasing rate. Santa, when I mentioned that in class, people get confused. Increase at an increasing rate, Santa is increasing at a decreasing rate. If you look at the graph that was there, from the point of diminishing returns, you saw that from that point going up to the maximum yield point, even though there was an increase, but the increase was not at the same pace like initial increase, right? And then 1.3, a further increase in input will result in increased output at a decreasing rate. A further increase in output will result in increased output at a decreasing rate. Let's dwell a bit further, because sometimes let's clear, if there's any confusion, let us clear that now. At a point, the maximum yield point, or even at where there's the law of diminishing return, where there's an increase, after that, the increases will be there, but the increasing is not going to increase like at the initial. It's going to increase, but then at a decreasing rate. If you remember the analogy I gave you, that a car is climbing a hill, right, around for Beaufort, around Queenstown, somewhere there. Initially, when the car starts ascending, the speed will be high. Even though the car is moving forward, the speed will be high. But as it reaches the summit of the hill, even though it's increasing, but the speed decreases. If initially the driver started with say 120 kilometers per hour, 100 kilometers per hour, by the time it gets to the summit of the increment or the increased speed will be lowered, right? Does anyone have any problem with this? So watch out for these words that increasing rate and then increasing but decreasing rate. Don't let those things confuse you. They should never, ever confuse you. Right. Just a moment. Just a moment. I mess up big time. Okay. On okay. No, but yeah, I want to move it now to the notes. No, this one's done. Eh? So you're going to okay, yeah, you see it. Yeah. So I move to the next slide. Okay. All right. So now, sorry for that. Technology beat me here. Yeah, right. Don't forget, I was born before computers were made, so it's not a big deal as such. You guys were born into it. Right. So now we done with the law of diminishing return. Remember my overview. I said we'll be looking at the law of diminishing return, then we go to capital. Right. Now the capital, we're going to look at financial management systems. Now, what are these financial management systems? Normally, they are records that help the farmer. So what do they help the farmers to do? They put sound management on the farm capital and an inventory of assets or inventory with the assets that are there and their value. Every company, every farm must have an inventory of assets. And it also helps out to draw a sound budget or use for the preparation of budget. If you have good financial management systems. And then do analysis and compare financial results or keep a cash analysis book. Put a sound plan regarding future of the business. So these are financial management systems, right? Now we are going to look at some statements that are relevant for you at this level in grade 12. We're going to look at income statements. We're going to look at the balance sheet. We're going to look at cash flow. We're going to look at cash analysis book, enterprise budgets, and whole farm budget. Right. The reason why we are doing this, again, question 3, paper 2, for both trial and the final exams. Production factors. There are 4 of them. They like bringing questions on capital. Most of the time, they'll bring a statement and a statement there and ask you related to, say, farming, right, or agriculture, and then ask you sometimes to identify what type of statement is this. Sometimes, most of the time, it's 1 mark, right? Identify this type of statement. And what I said to you earlier, one has to maximize. You guys have to maximize. If it's 1 mark, you must get it, right? Because you never know who is an internal moderator looking at your script at the exam center. If you're 118, 119, like 120 is level 7. So internal moderator might be kind of, okay, this person has got 118, let me look for 1 mark. So if you can maximize your marks and get closer to that, you're putting yourself in a very good position to be considered, right? And again, if you are 44, and I don't want to hear anybody talking about 45 out of 150. Don't do that. If you're in that region, move out. It's possible. Forget about the June exams. June exams you have written is gone. You're going to write trial exams. If I may give you an example, myself, when I was doing A-level before going to university, the trial exam, like the mock exams, chemistry, or there were 3 subjects. Chemistry, I had the worst performance in chemistry at the trial exams. And I said, this is not me. I love chemistry. You know, I did research. I sat down and said, what went wrong? I managed to sort myself. So in 3 months' time, one day, we wrote the final exams. The results came. Chemistry was my best subject. I mean, my best, best. And again, I've also seen students, learners here, try exam, some get 4, level 4, come the final exam, final, this is the matric, level 6. So you should not be dwelling too much in the past. All that you have to do is, okay, where did I go wrong? So you have to make sure you maximize the marks in the examination room. Okay, so we're going to look at this statement one by one with the aim that when you see a statement in paper 2, question 3, be able to tell whether it's a balance sheet, cash flow, or cash analysis book. Okay, so let's look at, I think that I've mentioned this earlier. Okay, now, let's look at budgets. Enterprise budget plus versus whole farm budget. And what is an enterprise? Enterprise can have maize. A farmer might decide to grow maize only. A farmer might decide to raise layers. Layers are the chickens that lay eggs. I hope you all know that from your grade 10 agri study, agri sciences. Layers lay eggs. Broilers are kept for meat. Broilers are kept for meat, right? So if you're keeping layers and broilers, you have 2 enterprises. The broiler is one enterprise, the layer is another enterprise. Even though they are all chicken, because the expenses, the income from broilers will not be the same as that for the cost involved in raising the revenues for broilers will never be the same as the one for layers. So what is an enterprise budget? It's used for planning and estimating income. Income can also be referred to as revenue. Sometimes they use the word receipts. It's the same. Income or revenue, expenses or cost. Sometimes they talk about expenditure, right? Sometimes they talk about so expenses, cost, expenditure, the same. So an enterprise budget is used for planning and estimating the income, that's the revenue, expenses, and profits of a single. I hope I'll be able to write this down. A single enterprise. A single, like I said, a single, if you don't know, it's fine. A single broiler enterprise, layer enterprise, right? Broiler enterprise, layer enterprise. So a single enterprise of a farm business. Enterprise budgets are constructed on a per unit area basis, such as per acre. How much maize are you going to get per acre or hectare? How much potatoes, how much tomatoes are you going to harvest per hectare? All right. So to facilitate comparisons among other enterprises. No 2 enterprises are the same. I've already said it. Broiler enterprise different from layer enterprise. They are not the same. The cost in producing a broiler, then broilers 6 weeks, they are ready for the market. Layers start laying at the age of 18 weeks, where you have sold broilers about 3 times. So, yeah, that is the enterprise budget. Now, what is a whole farm budget? A whole farm budget is a comprehensive summary of all the resources and planned activities of the farm. A summary, comprehensive summary of all the resources and planned activity of the farm, include expected costs, revenue, and profitability. So the example that I gave, that if you have broiler and layer enterprise, the 2 of them, if those are the only 2 enterprises that you have on your farm, they are a whole, you combine them, it's a whole farm budget. If you have cattle, if you have goat, you have sheep, if you combine all the 3, you have a whole farm budget. But if it's for goats only, it's It's single, so it's an enterprise budget. Now, what is an income statement? The income statement states or shows the income or revenue or receipts that are coming in. It also shows the expenses or expenditure, and then also gives an idea about profit or loss of the enterprise. Profit or loss of the enterprise. Because as we will see, you'll be doing some calculations very soon. Very, very simple calculations. I believe those calculations, primary 6 or even grade 7s will be able to do that. So there's no need for you. If you get something wrong there, then you should be checking yourself what is going on. Put a corrective action as soon as possible. So income statement, the main components, the income or revenue, they might give you a table which has the state one side income, the other side is expenditure, and then the profit or loss. That will depict an income statement, to show an income statement. Cash flow statements. Cash flow. Money coming in and out of a business. It reports the cash generated and spent during a specific period. For example, a month, a quarter, or a year. It depends on who is reporting or the owner of the farm. So the cash flow statement report the cash generated, the money generated and spent. A farm business, you cannot generate money and keep all the money in your bank accounts. You definitely have to spend. You have to buy feed. You have to employ labor. You have to mend the fence. Those kind of things. Those be expenses. So things are coming in. If you are growing tomatoes, you have to have seeds. You buy seeds. You buy fertilizer. You, harvesting and those things will cost you money. Packaging of the tomatoes for the market and those things. It may include profit or loss. And then it also show opening balance. The cash flow statement will show you an opening balance. So keep that at the back of your mind, that you see a table of a lot of items and it gives you an idea of say maybe a quarter or a month or quarter of a year, the activities that were the money that was coming in and out of the business. And it also got an opening balance. Then you should know that this is a cash flow statement. A balance sheet. This is a financial statement that details a company's assets, liabilities, and shareholders' equity at a specific point in time. At your level, normally they might not even bring the equity. Equity is normally the owner's contribution, the money that is generated by the owner, or the owner has invested in the business, or somebody else has invested in the business. But the most important thing, keep note, a balance sheet will have one column for assets and another column. Sometimes the left side, most of the time what I've seen, the left side of the table, you have assets. It can be current assets. And then on the right side will be liabilities. So keep these two words in mind, assets and liabilities. I believe by now, all of you know what an asset. Asset, things of monetary value that the company owns. If the owner or the company owns structures, buildings, cattle, goods, those are all assets. Those buildings, those are all assets. Liabilities are the things that the company owes, and the company must pay. The company must pay or still yet to pay. So those are liabilities. Liabilities must be something that is there that the farmer must still pay for. You see, business sometimes get credited. They get credit to do business, right? If you see those big farms, big companies, it's not that sometimes they get some of the things on credit and they pay. As soon as they start selling, they pay, right? So what are the components of a balance sheet statement? The value of the assets. What are these assets that I talk about? The buildings, the cattle that is there, the goats, the tractors, the buckets, the buildings. Those are assets. So if you talk about the value, if a tractor has been bought for 700,000, that is the value of that tractor. If that building there is 1.5 million or 1 million, that's the value. So we are talking about the value of the assets. We are not talking about the list. We are talking about the value, monetary value. Monetary value. All companies must have. If you go to any company, if you go to the schools that where you are, all the buildings that are there, the principal knows the value of those things, the building, the value, the furniture in each classroom is listed. The chalkboard or whatever is listed. Those are assets that belong to that school, right? And they all have monetary value. Maybe a chair is bought at 200, 300 rand. It's a value of the chair. So when you put all those together, those are the assets, right? Liabilities are things that sometimes the schools owe ESCOM, they owe the municipalities, sometimes the schools owe people, there's some telecommunication companies. Those are liabilities that some the insurance against theft, insurance against fire for the buildings. So those are liabilities. So all those things in a month, the farmer must know that, okay, every year or every month, you have to pay this insurance company this amount. We have to pay the laborers, the tractor operator, you have to pay this amount. You have to pay, those are liabilities, right? Then cash analysis book. Cash analysis book. If you look at this table that we have before you, it gives an idea. First of all, the immediate left, or the extreme left, we have the day 2016, right? We have September 1, September 5, September 7, September 15, September 21, 24, 30. Now, description, balance brought forward. S and Co for how much? That is a receipt number, 410, and the amount that has to be paid is in dollars. The sales that were made, different days. So every single day, the activities are, what is it? And like I said earlier, receipts are income. Receipts are what? Income. Are you together here? Okay, receipts are income. And then we go to the right side. We have the dates. So we have the date September 2, September 16, September 10, September 12. And then we have the amounts, the payment that were made. So this is a typical, it's showing almost daily recordings of receipts and payments, the money that is coming to the business and the payments that are going out, right? There's a cash. And if you see something like this, just check if every day there's a record of almost every, look at that. This September alone, there are about how many recordings? If you combine the receipts and this, so many recordings, right? So this is a cash analysis book. You might find examples in some of your textbooks. So this is a cash analysis book that you have to do. So the cash analysis book, a record of changes in cash and record of all cash transactions, or records of all cash receipts and expenditures. That is what you saw in the table, summarized in the table for you. Okay. Now, calculations. You will soon be doing calculations, and you're not doing this for doing calculation purposes, because you are paper 2, question 3. You cannot avoid these two calculations. It's either both of them or one of them. One of them is there. So we're going to practice. We are going very soon. I'm going to ask you to do some practice. And please, my colleagues that side or educators have told you this, but use this time to say if there's something that you didn't get it now, right? Don't wait for any other time. Get it now and sit down and dust it. So that when next month, try exams. When they come, you see a question, you say, you finish, I say, now this one, finish the question before I finish the teacher. It's not difficult. Profit or loss, income minus expenditure. Let's be very, very, very careful. Learners, be very careful. Sometimes the value of the expenditure is more than that of the income. It does happen. Some businesses make losses. Some make profit. It's not all that rosy. Sometimes some businesses make profits. Sometimes they make. So don't jump into conclusions. As soon as you see the higher figure, and then some of you will rush and then go and put that as income. There's nothing like income must always be more than expense. There's no rule like that. Let me say, for example, in a year, the income for this particular farm was say 3.4 million. All right, that's the income for say 2023. Okay, in the same year, the expenditure was 4.1 million rand. The same year. Now look at it carefully. We are saying, or the norm is that you take expenditure from income. That's that. You should never make a mistake. You must get this formula, get in your head and practice it, right? So let's look at this example, for example. We are taking this one. Now, if you are going to use this formula, which is the correct formula, then this thing will be R 3.4 million minus R 4.1 million. Now tell me, all right, yeah, okay. I can say this is already.
We are calculating profit or loss. Listen, guys, this is very important.
Yes, we are calculating profit or loss. So here, like the income, or you always take expenditure from income, or income minus expenditure. Right. In this particular case, our income is 3.4 million. Our expenditure is 4.1 million. I can safely say that this is about negative 700, what? 700,000, eh? Are you together here?
Yes.
Negative 700,000. The negative should come this side, eh? Okay. It should be like this, negative arrow, 700,000. 700,000. So is it like this, 700,000, yeah? Okay. So I hope you have seen this one here. So you see that the value is what? Negative. Can you see that? Yes, the value is negative because the expenditure for that particular year is more than the income. Indicating the farmer has made a loss of about 700,000. Right. So be very careful there. Don't jump into once you see a bigger figure, you go and take the smaller figure from the bigger figure. Don't make, and I'm telling you that it's not all the time that businesses make money. They can also lose. Right. Now, so that brings us to net worth. What is net worth? Net worth is normally used when you're doing calculations on balance sheets. Remember what I said about balance sheets? There should be asset. There should be an E here, right? Assets. The assets are normally grouped on the left side of the assets minus liabilities. The assets are what the company owns. The company has got them, right? The assets. It belongs to the company. Liabilities are the things that the company has to pay for, right? So here too, we get this from the balance sheet. Net worth. Normally, when you see balance sheet data, they will always ask you to calculate the net worth. So our net worth is this formula. Please get this at the back of your mind. You should. Nobody gives formula in. It's not physical science. It's not maths. We don't supply formula in the exam room. But get this once where you practice it. Assets, monies, liabilities. All right. Okay. And again, before we even go into calculations, which I'm going to subject you to some calculations very soon, I still want to warn you. Sometimes the value of the assets might be less than the value of the liabilities. So be careful. So if it's like that, then the company, if the assets are less than the liabilities, it means the company is not making profit. It's not viable. It's not a viable business. So there are certain measures that can be taken. Either the farmer folds up or he cuts expenditure, right? It reduces the number of labor. I mean, it will depend on the situation, all right? Okay. Now let's look at this. Now here we are. The table below represents a financial record in a farming business. Yeah, but before that, let's see whether I can. Okay. I want you to do this one first. Right, activity 3. Let's look at activity 3. We're just talking about something like that. Now, the table below shows assets and liabilities of a farming business for the year ending on 28 February 2021. Right. Now, the financial year depends on the company. In the SA Public Service or the government here, the financial year begins 1st of April and ends on 30th of March or 31st of March, right? A company or the farming business can say, okay, my financial year begins 1st of January and end of 31st of December. So it doesn't, so when you see end of February 2020, it means the financial year for that particular company ends at the end of February, beginning of this. So let's look at this calculation, just from what you said, the balance sheet. Now I'm going to ask you to do this. 3.1, identify A in the financial statement above. 3.2, calculate the value of B in the financial statement above. And then show all calculations. Show all calculations. There are 2 marks for it. The moment you hear show calculations, you see the tendency is that some of you will go and work the question on your question paper. And then when you come to the answer sheet, you just present the answer the final answer. It's wrong. You might lose some marks. Do all your calculations, show all calculations, do on your answer sheet. Nobody, if you think after doing it and you don't need that, you can safely, you can cancel. Nobody penalizes you. Nobody at the examination center or the marking center will penalize you, punish you. So be careful. Avoid the temptation. Working the question out on your question paper, then transferring to your answer sheet, you lose concentration. You don't include. And then be careful. When they say show all calculations, you must show all calculations. Sometimes they even, if you look at, say, paper 1, digestibility coefficient, they say the formula alone, you gain 1 mark. Similarly, nutritive ratio, they use the formula. Even here, if they say draw a line graph, once you draw the line graph, whether the line graph looks like whatever it is, once it's a line graph, you get 1 mark. So, and then the third aspect is calculate the net worth. Remember what you said about net worth? Okay, I will scroll back so that you can have an idea about what you took. Calculate the net worth of the farming business above include what? The formula. This is a previous examination question. So we should not be playing. Let me quickly go back and then, okay, here we were here. Look, let's look at you are going to do the calculation on the second aspect, net worth. And we said that, I believe, please write this one down so that when we go to that slide, I don't have to come here. Net worth is equal to assets minus what? Liabilities. Net worth is equal to assets minus liabilities. Write that down so that when we go there, you use that to do your calculations. So I'm moving the slide. I know you are very fast writers. Okay, this is the question, right? So now, how many minutes? How many? Five marks. I'm giving you 10 minutes. Oh, it's too much, no? 10 minutes to 10 minutes. Okay, 7 to 10 minutes. Please finish this. I will ask you for answers. Right. Please read the questions carefully. They say identify A. Nobody talk about B here. They say identify what? A. So if you identify B there, if you mention B there, you are wrong. As you do, I know people a lot of people make when it comes to this calculation, the mixing of feed. Yeah, you guys make a lot of mistakes. Calculate the quantity of feed B in the mixture, and then some people be calculating A because you failed to read the question. Some of you failed to read the question. Underline the word identify and then A. Please identify, underline that word and then A, so that you don't mess up. Right. question can be there, and then I'll ask for answers on the question. Hello, I'm back here, Lennis. I want an answer to 3.1. Identify A in the financial statement above. If you want to answer, please raise up your hand. Your coordinator or the educator, they will help you raise up your hand, right? Or you can speak. You can speak. I want an answer to question 3.1.
Huh?
Yes.
Class now.
What is the answer? Identify A.
Financial statement.
Balance sheet.
Be bold, be bold, be bold, be bold, be bold, and confident. What is A? Hello?
Balance sheet.
Balance sheet. Give her a clap of hands. Give her a clap of hands. You clap for her, eh? They said somebody told me in the past, I went to a principal's office and then the inscription on the door, he said the best job, the best man for the job is a woman, eh? The best. So that girl there is on fire. The girl is on fire. It's on fire that side. Eh? All right. Okay. So let's go to 3.2. Because women are leading this country. Women are leading. And that one is a fact. All right. Okay. Okay. Yes. You want to say something about question 3.2, right? Yes. What's the calculation for B? 3.2. I saw somebody's hand up. Okay, what's the answer to question 3.2? I want someone should give us an answer. You can just give us the final answer, and then after that, if it's correct, then we ask you to show how you manage to do that. Calculate the value of B.
Hello.
Yes. Yes.
The answer for 2.2 is 956,000. Yours
956. 950. A lady again. Okay. Now tell me, is it correct? Yes. How did you arrive at it? The one who answered that again. How did you arrive? What figures did you add here? How did you calculate it?
You add the subtotal of the liabilities with the medium-term liabilities and the subtotal altogether, and then you get your total liabilities.
Okay, no, you are clever, eh? Give a round of applause. You are clever. Good. I'm happy with that. So the additions, showing the additions of the subtotal, the subtotals, and then by adding the three subtotals, you get 1 mark. Are you together here? By adding 55K of 55,000 plus 340,000 plus what? 570,000. You get what? 1 mark, eh? And then the final answer, you say the final answer is what? 900 and what? Something thousand. Okay, you'll get another mark. So that is how the marks are allocated. Remember what I said? I said you must show calculations. So we must add all those three to get 1 mark. And then the second final answer you get. So if you just came and just wrote the final answer, you only get 1 mark. You don't get the 2, right? Now the next question, calculate the net worth of the farming business above. The net worth. What formula is used to calculate net worth? Net worth is equal to the value of assets minus what? Liabilities. Liabilities. Okay. All right. Now, so that is equal to what is the value of all the assets? 1861. No, I shouldn't be doing this for you. What is the value, the total assets? What's the value of the total assets? Anyone? 1, 8, 61, right? Okay, that is in rand there. Okay, and then what is the value of the liabilities? That is the one that was calculated in B. Are you together here? The value that was calculated in B. Yeah. So what was it? What was it? 900 and what? 900 and okay. Are you tired or what?
Okay.
900 and what? Okay, now let's look at this. Can you see this? So the balance sheet is correct. Okay, the balance sheet, and then at financial current or short-term assets. Current or short-term assets. And then B, this one here, 1 mark, and then another. Calculating the B. No, I think there's another answer. There's one left. The next left. Okay. No, not this one. No. I think that will make that. I don't know whether maybe I didn't include that. Okay, but at least you got it correct, right? Now, let me say this again. If the assets are less than the liabilities, then the farmer is operating at a loss. The farmer is operating at a loss, or the farm is not viable, or the business venture is not viable. Not viable in the sense that the farmer is not making what? Profit. It's not making profit, right? So watch out. But then if the value is positive, if the assets are greater than liabilities, assets greater than liabilities, if the business is profitable or viable, so the farmer can continue with operations, right? Because these are the questions that these are questions that sometimes follow. Keep. Okay. Can I get to the slides? No, not the memo. The slide. Okay. Yeah. Right. Okay, so we are done with that question. We're going to discuss another question. So before you go there, I want to make sure that okay, you are going to answer this question here. Let's what did I do now? Okay. Okay, let's look at this question. The information below, okay. The information below shows the assets and liabilities of a farm, right? The assets, value in rand, liabilities, value, right? And then the value of the farm is 3.5 million. The tractor loan, 365,000 rand. The value of the vehicles, 275,000. Overdraft, 150,000. The bond is 4.2 million. The bond is, if you buy, say, property, if you have property on your list, maybe you might have got a loan from the bank, and every month you pay something towards that, right? You make a contribution, maybe you say pay 10,000, 20, 15,000 towards that. That is a bond. The homes, if your parents have got a loan from the bank to or any financial institution to buy a house or buy a house property, for example, or land, you pay a bond. Most of the time, people don't understand what a bond is. That's what it means. Overdraft. If you are doing business, sometimes you run short of cash. The banks, your banks can give you money. Maybe at the end of the month you have to pay. So you call that an overdraft. And you have cash and you have value of buildings. Now, what you have to do here? The question says the information below shows the assets and liabilities. Value of the farm, tractor loan, value of vehicles, overdraft, bond, cash, value of the buildings. Now, the question asks you, the question now asks you, redraw the table above and complete the information provided. Calculate the net worth of the farm, indicate whether this farming business is viable, give a reason to support your answer, right? If I may go back, so what you have to do now, what you have to do quickly, don't write any nice table. Sketch the table. Okay, do you have an answer? Nyazi?
Can we please ask?
Do you have a question?
Yes.
Yes, please ask.
Please repeat the overdraft. What is an overdraft?
Overdraft. Okay. I have a business. I'm raising my chickens, right? Now, I must buy feed, but I don't have cash to buy feed. I can go to my bank, Standard Bank, Capitec, ABSA, or Land Bank. Give me 10,000 rand. I want to buy feed because I'm short of cash. And at the end of the month, I know I'm going to sell chickens, right? So the bank can give you that money. It's a sort of a loan, but a very short period. At the end of the month, you must pay. So that is an overdraft, right? Overdraft. It's a short-term sort of credit, very, very short-term, right? So, and the overdraft, you are going to pay, you are still going to pay. Are you together here? You are still going to do what? Pay. You are still going to pay. So obviously, it's something that will fall into the category of what? Overdraft, because you are still going to pay, right? Are you together here?
Okay, yes. Thank you so much,
Okay.
sir.
Are you fine?
Yes.
Thank you. Right, thanks for asking. All right, so please draw this table quickly, and then input this information. Let me go back to that slide. And now I want to redraw the table above and complete it with the information provided. Calculate the net worth of the farm enterprise. So what you have to do is to redraw this table quickly, make a sketch of it quickly, right? Because time is not on our side. And then what you do is you input these values and then you do the calculations. Please redraw this table. You know that guy who was writing the exams? Do you remember that story? You see, this guy was writing a paper, and the paper say, look at the table below and answer the questions that follow. So the guy had bent, looking under the table that is the table that he's sitting on. Then the invigilator goes, hey, what are you doing here? So the question say, I must look at the table below. And then, so I hope nobody's doing that. Draw that table, the one on the board, not the one that you're sitting on. You hear that? Okay, so sketch this quickly, right? And then input with that, populate the table with the information that is there. Populate the table, because it's same. Redraw the table above and complete with the information provided. And there are 7 marks to that, right? Do that first, and then we do the calculations later, right? Hello? I can see somebody's hand is raised. Please ask your question. Somebody's hand is up. Please ask the question. You are allowed to ask questions. Please ask. Hello? If you have a question, you are allowed to ask now.
Sorry, sir.
Yes. Please go ahead.
See what is gone?
Sorry, I can hear you.
What is the bond?
What is gone?
Yes, sir.
Can you see it now? Are you all right?
What is a bond?
A bond. Oh, you're asking the bond.
Explain what the bond is, not the value of the bond.
Oh, okay.
Yes, what
No,
is the
I
bond?
get you. No, I'm going to explain. Please. I explained earlier, but I'm going to repeat, right? A bond, then. All right. Now, normally this is related to property, like fixed properties, like land, like farm, right? Like irrigation equipment on the farm, right? Like a borehole. Now, most people, when going to purchase or farm, they wouldn't have cash, they wouldn't have 10 million, they wouldn't have 2 million to go and start the business, right? So they might go to a bank, a financial institution like ABSA, Standard Bank, Capitec, FMB, and others. It's okay. Can you please finance me? Now, if they look at your business plan and it's feasible, they can give you, say, 10 million, 5 million, right? Now, the money that you're giving you is not for Mahala. It's not a grant. A grant, you don't pay for it. You know, you have child support grants. Those are you don't pay. But the bond, you must pay. The bond must be paid back. So the bank might say, okay, every month, we are going to give you this every month for the next 4, 5, or 10 years. You are going to pay, say, 4.5 million. Are you together here? 4.4. So it's a money that you have to pay for getting a loan for, say, property, right? Like if you start working, you can go for a bond to buy a house, a flat, or a townhouse, whatever, right? So it's money that you have to pay. It's an arrangement between you and your financial institutions. Are you together? Is it clear that side? Because you have to pay monthly. They deduct from your, as soon as money goes into your account, you make sales, the bank deducts that, right? Because the bank that has financed you, right? If it's not clear, you can still raise up your hand, please. This one, this and that. Kill a lot of people.
Net worth, cash flow statements. There's a question up.
The values that undergo in liabilities. Yes, the answer.
Can you say ask?
So,
Can you please ask the question?
so like that.
Please focus on, please answer the question. If you discuss, you're not finished. Just do your own work, the way you understand it, please.
Okay, so
Are you done?
yes.
Okay. So then, where will you put the value of the farm? What is it? Will you classify it as an asset or liability?
Asset.
Good. I'm happy with that. So the value of the land, the right 3.5 million. Okay. The tractor loan, is it a liability or an asset?
Liability.
Good, 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 good. And the value of the vehicles, liability or assets?
Asset.
Great, great, great. Overdraft, asset or liability?
Liability.
Great. The bond, liability or asset?
Liability.
Liability, because you are still going to Patana, you're going to pay, eh? All right.
Yeah.
And then the cash of 50,000, assets or liability?
Asset.
Assets, okay. And then the value of your buildings, assets or liabilities?
Asset.
Okay, so the value of buildings, 650,000. The cash of what? 50, 1, 2, 3. And then you have the value of the vehicles, value?
275,000.
275, 1, 2, 3. And then value of the farm, value of farm. That's 3, 5, 1, 2, 3. 1, 2, 1, 2, 3. And then your liabilities are what? Your tractor loan, right? Tractor loan, you must patala. There's nothing for Mahala. 275, 1, 2, 3, right? And then your overdrafts, overdraft. How much is the overdraft? 150,000. You must pay that to the bank. The bond is 4 to something like 4 million. And then, so what are the liability items are the tractor loan, your overdraft, and your bond. Okay. Now, quickly, shall we do this? I want you to tell me the total value for the assets. What's the total value? Has anyone done that calculation already? Okay, do those calculations. Let's do that quickly. The value of the total value of the assets and the total value of the liabilities. Do that quickly. 1 minute. You are grade 12. I believe most of you are doing maths.
Done.
You are done. Okay. So what is the total value in rand of the assets?
4,475,000. 475,000.
Okay. And then the total of the liabilities?
4,715,000.
So, something like, okay, right. Okay. So what is your net worth? How do you calculate net worth? What's the formula for calculating net worth? Assets minus what? Minus liabilities. Good. Okay, so your asset, when you do the calculations, is the asset, is your net worth negative or positive?
Negative, sir.
It's negative, right? Negative. What's the negative what? Negative what? 240,000. 240,000 then?
Yes.
Is it like this? Oh no,
Yes.
240,000. Okay. So then, 240,000. Now that is great, great. I like what I'm hearing from you guys. Very much appreciate. You make my day, right? So your net worth here is negative. What does it mean What does it mean for this farm? Okay, read what the table and do the you've completed that. Indicate whether this farm business viable. Give a reason. Is the farming business viable or non-viable?
Non-viable.
It's non-viable. Great. Non-viable. Good. Non-viable. Why?
Because the liabilities are more than the assets.
Liabilities greater than what? Assets.
Assets.
Or you can also say assets are less than what? Liabilities. Is the same, saying one and the same thing. Liabilities are more than the assets. The companies, the firms, liabilities are more than the assets, or the assets are less than the liabilities. You can put it any when you get your full mark for that. Yeah, but I like this. I like what I'm hearing this afternoon. Right. Time is not on our side now. Not sure. So I think we finished with this question, right? True or false? Okay, let's look another quickly. We have a few minutes. Okay, let's look at this question. I'm happy if all of you, if you didn't get it, talk to someone who was able to answer it correctly. We always learn from each other. As educator, I'm an educator, very experienced one, but I'm always learning something new from my colleagues. Don't be shy to ask. You see, the worst thing you can do to yourself is that you don't understand and you keep on keeping that misunderstanding. What if you get to the exam room and then that same thing, concept is there? So you should always interact with others and ask questions, right? Let's quickly look at this. The table below shows the financial record showing the expected expenditure and income of a horticultural farming enterprise. What is horticulture? Growing of fruit trees, your apples, your oranges, right? All right. Your grapes, all right. Identify the type of financial statement represent identify, you're just naming it, type of financial statement. What type of financial statement is represented by the table? I want an answer from the class. Expected expenditure, expected income. Can I scroll up for you to look at the definitions that we gave? Any idea? Okay, let me quickly go scroll up and then you tell me the answer. Just look at this one here and you tell me. Look at this one here. Do you have income and revenue? Okay, let me go back there. Oh, no, of course, sorry. Have you seen this one here? Expected what? Expenditure and what? Expected income. So what do you think? This is an income statement. Are you together? Because it's giving us an idea about the expected income and what? Expected what? Expenditure. Right. Now, the next thing is you use the formula to calculate the profit or loss of this enterprise. Profit or loss. What is the formula? Is what? Income minus what? Expenditure, right? Expenditure. So all that you do is you put the total of your expenditure here, the expenditure here, and the total of your income. So you subtract the expenditure from the income. You subtract the income. The expenditure from the income. It should always, the income, your formula, the income must come first before expenditure. Avoid the tendency, the temptation. I explained that. Right. Okay. And then you indicate. So let's say, can someone